Thank you, Grace. All right, evening, everybody. I guess everybody is very excited about this launch. And of course, for tonight, I think the key objective we want to have is to share with everybody some of the key research that we have found and analyzed. Of course, for all our PLB events, we have been very specific for the last 3 years whenever we have any webinars or seminars that, whether is it talking about landed properties, condo investments, is all very framework-based. And of course, for tonight, the key function of this event is to share a few frameworks pertaining to Springleaf in this particular launch that's going to happen very, very soon. All right? So my segment will take probably about 40 minutes, and later on I'm going to invite our new launch investment director, Rain, to share more specifics about the project itself. So we've just released this new launch market report a couple of weeks back, and some of the key insights are based on basically this report that is also available for download. But the main thing that is happening for the rest of 2025 is that when we were analyzing in terms of the land bid prices, as well as some of the launches that are going to be launched, I think where we are today, tonight in this particular show gallery is that this launch is going to be something that I think has a pre-catalyst kind of opportunity. So this was some of the news that has happened very, very recently. I guess if you have been sort of like following the market, you probably have seen some of this news that has been happening in the last few months. So for tonight, I'm going to share very specifically and put a lot more time on the 6 pricing frameworks. This is basically to avoid what we call an entry price trap. And of course, within this framework, there's going to be a methodology that we will use. In fact, later on, as you work with our consultants one-to-one, they have 2 very important tools that is going to help you on the ballot day itself to select the specific stack as well as your exit pricing. And within my sharing as well, there's going to be core methodologies that you can also adopt, right? So these are the 3 things that we'll be talking about. And of course, in terms of the 6 steps, before that, I'm going to share with you whether you are John, like planning to maybe analyze into a new launch and then to invest in a new launch, and let's say your plan is that after 4 years you want to exit, or whether you are Charmaine, that you intend to, let's say, like invest, once the TOP collect your keys, you maybe want to stay for about 2 to 3 years and then you want to sell, and maybe this could be your first pivot home and you want to buy bigger. Or you could be Kevin and Felicia that is planning to have a new property for own stay because you prefer to go for a new project, and then maybe this could also be like your pivot home before you upgrade to like a landed property in future. So I'm going to share with you these 6 frameworks, and these 6 frameworks pertain in terms from macro all the way to micro decision. And of course, the final step, which is the most important step, is really about the stack and site plan exit simulation. So later, as you work with our consultants as well, they will also be able to help you to do these 6 main things to calculate your entry, exit quantum simulation, your progressive payment, bedroom type simulation, as well as your investment capital simulation. So importantly is that they are very experienced on the balloting day, because sometimes on balloting day it could be a little bit emotional. So importantly, you need to have at least 7 choices in your pocket, so that depending on your ballot queue number, you will not feel emotional on that day. All right? Quick disclaimer, a lot of the things that I'm going to share, it comes from our in-house research team as well as my experience over the last 18 years. So if this is the first time that we are meeting, I'm the co-founder and CEO of PLB as well as the founder of KW. And of course, over the years, in the last 18 years, we have, I myself has done like a lot of home tours as well as podcasts and video analysis. This was some of the events that we have done over the years. And of course, we love to have this kind of community seminar events because we get to interact with you. You can also ask our consultants any questions later on. And we have also done a show flag gallery tour. In case any of your family members are not here tonight, you can head on to our YouTube channel, forward them this video, because we went in depth to analyze all the show flag models as well. So later on, after this tour and after rain segment, please look for our KW or PLB consultants, and they'll be able to help you with these 6 key features. They also have on hand a D26 and Springleaf Residence market report. And this report is very detailed. It contains very important information like the bubble charts for you to analyze the quantum entry pricing. And with them, they also have these two very important tools. This first tool is what we call the pricing disparity. With this pricing disparity, they are analyzing your competition around this zone in the range of 500 meters to 1 kilometers. Basically, you are looking for the gap to determine your safe entry price. Number two is that this is very effective on the launch day, because on the launch day, as we key in the live pricing, when the developers are releasing different stack kind of indicative pricing, they will be able to advise you which are some of the key resistant pricing and which are some of the very healthy entry and exit pricing. They will also be able to help you to simulate in terms of the potential gain that might happen, and we try to determine if the gap is healthy or not. All right, so let me touch on the first framework, which is the macro season framework. So where are we right now? Because we already have 16 rounds of cooling measures. Just 2 weeks back, we were just hit with a latest round of seller stamp duty. So it was 4 years, then went to 3 years, then went back to 4 years again, right? But I think importantly, it seems like there's not much impact on the ground. I just did a talk at IRAS about a couple of days back with the tax division. And of course, they were also asking me, Melvin, what is the impact on the ground? I told them there's no impact. Because traditionally, a lot of launches-wise, it all takes 3.5 to 4 years to complete. So this, of course, has very limited impact, including analysts were talking about it. But the most important thing is that Singapore cooling measures over the last 16 rounds since Lehman Brothers, I think it has done a great job in stabilizing the market. It has allowed less speculative in terms of foreign investment liquidity. But the important thing is to note in the last 5 years, post-COVID, it seems that the rounds of cooling measures cannot be released. So once it's released, I think the floodgate will open even further. But importantly is to note that we're in a very healthy and gradual growth market. And when we look at the key purpose of investment right now, we are of that methodology is that if you have at least $4.5 to $5 million, of course you can look at landed properties. But if your range is below 4, in terms of a healthy range, you need to identify condos with very high appreciation characteristics. So let us visit what is the purpose of property investment. Now, 18 years back when I started in real estate, all my investors are always looking for rental yield. That means whatever that we help them to invest, we want to see rental, less of mortgage, less of MCST, we want to see cash flow. But nowadays, because we are one of the most, I would say, popular cities in the world, in fact, we are always ranking top 10 in terms of our real estate pricing. And sometimes as Singaporeans, we are thinking, is Singapore a little bit too expensive or not? Are we in a bubble, or what is the state of the economy right now? And later I'm going to share with you some key statistics based on our research team on the macro market. But importantly, the key strategy that I think will be very wise for everybody to adopt is to hunt for these two things in any real estate investment that you touch, which is it must have the potential to appreciate, but importantly, it must have an ease of exit, because if you cannot exit, basically your capital is trapped in an asset. And a lot of times over the years, I've seen investors coming to us, it's like, Melvin, I've been trying to sell my property for 2 years, 3 years. Can you and your team help us to really exit? Because they really want to free up their liquidity. So these are two very important points. And in terms of frameworks, we have 11 frameworks and 12 investment methodologies. And later, as we head on, I'm going to share with you a little bit more frameworks, but this is the first chart for tonight. So the very first thing is that the new launch PSF on average for the whole island is at about 2425 PSF. Resale market right now is about 1,007 plus. This is basically based on the whole island approach. And of course, importantly, Guaco has already indicated in terms of its Springleaf launch indication PSF is going to be around this range. And of course, when this is in the middle of resale as well as the average new launch in the whole Singapore, I think definitely this could be something that is very interesting to look at. But sometimes when we see that resale is at about 1,007 PSF, but transacted data might not be a true reflection on the ground. True reflection is always in the seller's kind of like expectation based on live pricing. So let's have a look. I just called this out yesterday, and of course this is somewhere very near us. Panorama, very beautiful development. If you look at that 3-beta, somebody is already asking, just listed 2nd August, they're already asking $2.32 million, balance 87 years, and of course this land tenure starts from 2013. Take note, we always look at the land tenure start date. We don't look at the completion date because you're buying the land tenure, which is very important. So this is already 12 years old, balance 87 years. PSF is 2,176, 2.32 for 3-bed, 2-bath. And of course, the 2-bed, 2-bath is at 1.7, 2,133 PSF. So of course, home sellers will definitely want to sell at a specific price because every resale seller is also asking what's next. And they want to be able to cash out a certain range so that they can reinvest. This is in the north, of course, integrated development, not low as well, now it's already 2,000 plus PSF. This is in D19, already 2002, 2003. This is, of course, Woodley RCR, 2425 already, for resale. And then Park Place, and of course, this, I think, is something that we need to take note of because this is happening in the next 2 months. So now, sorry, it's just next 1 month. So this is happening in SEP. What I mean about happening in SEP is that there's going to be a liquidity round that will highly be very possible because in September we are facing 2 Fed meetings. And this is the latest projection from Phillips Capital. So basically, if this were to happen, because Donald Trump is giving a lot of pressure to the Feds, and of course if they so-called like cave into the pressure to drop rates by 2 rounds, then of course low interest rates coincide with quantitative easing. And whenever this happens, when you look at the word QE, investors tend to seek safe haven, which is basically to cash out from the equity market, their Max 7 tech stocks, and they want to park into something that is stable. So this basically will be the forecast that has happened in a lot of research reports by analysts, and they are projecting that basically by January 2027, the rate cuts will be even further. So we might be looking at 2 rounds by the end of this year. And if that were to happen and profit taking happens, then very likely a lot of people will start to really put their funds back into real estate. So where we are right now in Singapore, I think it's very important to understand because we thought that the last 11 rounds of interest rate increase will have an impact on our real estate market. But the strange thing is that when rates are being cut, our price sort of moved up. When rates are being increased, our price still moved up. So it's like, what is happening to the Singapore market? And I think one of the reasons is because Singapore is really small. Our population is very stable. There's a lot of global liquidity still flowing in. The latest report also shows that the average holding period of Singaporeans is very strong. So whenever they buy real estate, they tend to hold for at least 6 to 9 years without the stress of having to sell it. There's also been an increase of first-time buyers directly entering into new developments. This is demarcated by the light orange color in terms of first-time purchases. And this has happened ever since COVID. So this is sort of like a demographics change on the ground. We have also been seeing an increase in young people. So 26 to 35 years old basically are going straight into new home sales. So basically 26 to 35 years old, demarcated by this blue, dark blue bar, they have been going directly to new launch properties as well. I think it could be a dropping kind of like a marriage rate, a delayed marriage, as well as like the new kind of like mindset about going straight into investment once they start to do well in their career. Now, this also has been a catalyst because the ownership in terms of private properties demarcated by this pink color graph over here. Over the last 10 years, it has creeped up a fair bit. I think this was after the realization that if our profit and capital is continuously parked, maybe in our HDB apartments, one day in terms of its strength of growth, it will be affected. So a lot more people are trying to really park their capital into the private property market. Okay, this also sometimes will be a worry because sometimes we think, hey, if foreigners cannot come in to buy Singapore real estate because of ABSD, does it affect our pricing? But based on basically our tracking, ever since 2018 all the way to last year. Foreigners, even though their transaction count 5.4% all the way to 1.22% last year in terms of their contribution to residential properties, but it has sort of no impact on our local market. This just shows that really the entire market is sort of like dominated by Singaporeans and PRs over the last couple of years. Something to note also is that sometimes we might think that, wow, Singapore seems like I drive everywhere, there's a lot of properties, but actually we have 1.2 million HDB apartments, we have 73,000 landed properties, and we only have 378,000 condos and apartments. But out of 378 condos and apartments, 88,000 are not owned by Singaporeans. So there's only 280,000 units that are being owned by Singaporeans. So when we look at this, there's two key impacts. Number one, the overall quantity actually is not high because every year there's just an increment of about 10,000 units into the market through GLS. Secondly is that foreigners and companies that own condos and apartments, they will never sell because if they sell, they cannot buy back. They will be taxed at the new 60% ABSD. So this creates like what we call a sustainable stability in the market. All right? Okay, last part about the macro news is that this was by Henley & Partners last year. We rank, because of these 9 key reasons, third last year in terms of high net worth millionaires inflow. And behind the scenes, actually since 2010 until today, in the last 15 years, every year we have about 22,000 naturalized citizens granted. And we have about 32,000 PRs that are granted annually. Naturally speaking, a lot of our clients, once they get citizenship or PR, they will start to look for properties. We serve a lot of our clients in this category as well. So sometimes in Singapore, we as Singaporeans, we fear the market pricing, but globally, a lot of people are just waiting to quickly enter into the market. All right? So I think the next portion that we want to look at is that what will your future buyers think when they look at the property that you have invested? Because take note, the moment you invest in a property, 4 years later or 6 years later, if you want to exit, it's extremely important to understand this key aspect. So we want to move into the developer season framework. Let's have a quick look. So based on our research that has happened, what we notice is that this likely could be one of the last launch that we'll be seeing at a sub 2250 PSF range. That means in a range that is below 2,300 PSF, we might not be able to see this starting from about next year or maybe on the Q4 of 2025, because in terms of land bid pricing, not many developers have the opportunity to bid for a land at a very attractive entry bid price. And I think in terms of Guaco, their key strategy is really to create like a win-win situation for, of course, themselves to build a specific attractive development, but really passing on value to the investors and consumers that are looking at their projects. If we look at the latest land bid pricing, a lot of developers will likely have to start launching at about 2.6, 2.7, 2.8, even for OCR. And of course, heading on to the next few years, this project might be one of the last season of 2,000 to 2,250 PSF. All right. We also might be entering into a new season next year with 2.5 to 3,000. And we track this also based on the market behavior pertaining to what is happening on 3 levels. Number one, when we look at the blue color graph, this blue color bar indicates the amount of projects that developers has to hand over at TOP. So the last 2 years, 2023 and 2024, developers has been handing over a lot of projects because he has completed. And of course, the last 2 years, this has, of course, given the developers liquidity to bid for more land. And these 2 years, I believe they are very focused to launch their projects that they have bidded. I mean, in terms of spending time with the architect, pricing, as well as developing the assets. And I think these 2 years is also coincide with the rate cuts that is happening. But the key thing is that these 2 years, based on our analysis, the resale pricing has already caught up in PSF and quantum. And that has created a disparity because a lot of buyers, when they go into the resale market or when they look at Property Guru, they are thinking, should I pay for a 3-bedder resale, 10, 15 years old at about 2 million or 2.3? but it seems like the launch price, I can still get something at about 1.8 or 1.9 million dollars, or maybe sub $2 million. So a lot of buyers are a little bit confused. Should I go for that quantum in the resale market, or should I take the opportunity for a new launch product? All right. And step number 3, we call this a pre-catalyst opportunity. Of course, when you look at this whole entire plot, this is where Springleaf is being located. There's 3 forested area over here, and of course, when we look at them, this will be the future 3 residential plot, which will then combine together with Lentor. So when you look at this, of course, we demarcate this from the URA master plan, but I think this grand plan that URA have is definitely very exciting. Later, Rain is going to share a little bit more about this whole concept over here. But when you get a chance to be the first, compared to maybe another part of Singapore where you are not the first, I think this is what we call a pre-catalyst opportunity. So always try to hunt for pre-catalyst opportunity, because when I started in real estate in 2006 and 2007, this particular project has a very deep impact on my learning point. When the Sale at Marina Bay was being launched back then, it was the first residential to launch in CBD, and everybody was very skeptical. In fact, Tower 1 and 2 were launched at different pricing. Tower 1, I remember it was about $900 over per square foot. Then Tower 2 was like $1,002 plus per square foot. But it was launched before the announcement of the casino, before MBS happened. And pre-catalysts always have a benefit after whatever news is going to happen in the region. Some of the consumers on the ground has also been asking us about this comparison. It's like, what about Canberra that is launching just up north? How do we view this? Now, of course, Canberra is also another fantastic launch. We're not saying that it's no good, but I think there's one key fundamental difference, is that the actual site is not as close to the station compared to Springleaf, but there's one very important thing, is that do you want to be the first among the future 14 condos, or do you want to be the most expensive benchmark against the 14 condos that's already existed? So one important thing to analyze always is that if you love Canberra for own stay, by all means, please go ahead, because sometimes we grow up in certain areas that we just like. But from an investment methodology point of view, when we look at the existing kind of condominiums right there, there's about 14 projects that's already been built in Canberra. So we want to be the first, of course, in Springleaf, rather than to be the last where everybody has been already built. All right, so take note, of course, the moment you enter into an enclave with existing 13, 14 projects, when it's launched and when you TOP, you will be the highest PSF. All right, but over here, the future launches is going to happen across in the 3 residential plots that URA has demarcated. So very likely there's going to be condominiums, there's going to be HDB apartments as well, or lightly prime or plus kind of categorization from HDB, but then this is the first time to be the pre-catalyst. Now, later as we speak of our consultants, we have also demarcated all the resale competition around here in terms of quantum for each bedroom type. So let's say if you're very keen in the conserve 1-bedder in Springleaf, we have already compared the quantum, and the quantum is very competitive because it's on par, and of course some of the resale quantum is much higher than what's happening in Springleaf. Now take note, there are a few freehold developments around this enclave, but we have analyzed that they are largely boutique projects, which is less than 100 units. So later our consultants will also touch on this as well. We call this the volume effect. All right? Now 2-bedders over here. So Springleaf will be the light pink color one. And of course, we have planted all the resale quantum based on live asking prices from Property Guru. 3-bedders as well. It's pretty on par, or it is lower than some of the resale counterparts. This is 4-bedder as well, so it's very competitive. Now, you will notice that there are a couple of freehold projects, for example, Meadows at Pierce. The quantum is pretty high, but of course, it's not near to the MRT station, so you really have to depend on what you're looking for. And of course, this will be the 5-bedder, all right, in comparison to the next 2 competition. All right, so far so good? Okay, let me move on. Okay, this is, I think, the very interesting thing, which we name it as the Lease Reset framework. So Lease Reset, let me just put in one chart in terms of comparison for you. So it's very easy to help you make a decision. So sometimes we will be a bit confused. Should I go for a resale property nearby because maybe I'm in the midst of selling my home or I have sold my home, or this might be my second property that maybe I have a resale that I'm staying in. I want to invest in a new launch, but sometimes I'm in a situation whereby I need to rent, all right? Or sometimes I'm in a situation that I'm forecasting, should I straight away get a resale and rent out now or stay versus waiting for 3.5 to 4 years. One very good exercise we can do as investors, all right, is to calculate the lease reset. So what is the lease reset framework? Basically, firstly, we take the target resale property and we try to find out what is the tenure start date. For example, Seasons Park, which is near to Yio Chu Kang MRT station. Start date tenure is 1995, all right? Okay, sorry, there's a typo here. Let's take it as 1996, all right? So 1996, we take the current year less of 1996. Basically, we try to find the balance lease. So balance lease is currently 70 years. Now, whatever target property that you're hunting for example, let's say you're deciding between this very big 2-bed, 2-bath, 1,044 square feet, 1.33 million, PSF looks really attractive, 1,002. Plonk in that number in terms of quantum, and then reset it back to 99 years. All right? Because take note, this is as if like you are buying a second-hand car compared to a brand new car. The reason the quantum and PSF is like this is because there's a balance lease of 70 years. So we divide by 70, multiply back by 99, we get the full price based on 99 years. So on the surface, you're buying 1.33, but actually if you reset back to 99, it's 1.88. On the surface, you're buying 1,273 PSF, but actually you're paying 1,008 if it were to be 99 years. And also take note of the second mechanism is that 4 years later, if you want to sell, what will the buyer think about your property? Because 4 years later is going to be 66 years old. So take note of the Ballas curve. 60 years and below, CPF valuation limit affected. 30 years and below, cannot take loan, cannot use CPF, all right? So, of course, then we take that target property, Seasons Park. If you put it through harmonization, PSF is slightly even higher. And then you compare to the launch that you're thinking about, all right? So for example, if you're thinking about Springleaf, if you manage to get something of a high floor at 2250, then is this quantum comparable to whatever that you're going for? And if you start to feel a bit uncomfortable about this, then you should skew towards the newer one. The reason is because after we compare both, after you do a reset, you must have at least a 20 to 25% disparity gap. If not, it is not worth sacrificing close to about 30 years of your shelf life. All right? So you must find the gaps. Try not to overpay for a resale property. All right? Now, second question is that maybe we'll think, yeah, but Seasons Park is quite big. All right? And of course, now all the new launches are very harmonized. Okay? Take note, harmonized means that you don't have to pay for AC latch anymore. No more bay windows, no more planter. Getting really quite solid footprint. I will compare this to like a big van compared to an EV car. All right? Because in the past, most of our projects were paying for AC ledges, we are paying for bay windows, we are paying for extremely huge balcony, but you cannot really use it. Okay? Now, second comparison, I use Novo. I also calibrated the floor plan over here, so you can see a lot of bay windows throughout, even in the bathroom as well. AC ledges, planter. So Novo, nice development. It was an EC opposite Yio Chu Kang MRT station. There's this 3-bed, 3-bath launch recently, end of July. It's still in the market. So basically $2 million, 1,004 PSF. After doing a reset based on its start date 2001, and of course, when you compare these two, this is $2 million, 75 years balance lease. Springleaf, I take the 3 plus flex plus HS, basically the home shelter. This is one of my favorite layout. And I think the flex kind of floor plan is really fantastic because you have this extra study room. This is brand new, and the quantum starts at 2.15. So when you compare this, I haven't even do lease reset yet. And after I do lease resets, I think it's even more comparable, because if I were to reset this Novo unit back to its full 99 years, I'm actually looking at $2.64 million if this is brand new. And PSF is about 1,008. 4 years later, Springleaf, I still have 94 years balance lease, but Novo, I have 71 years balance lease. So when I look at these two components, the third component is that if I were to buy $2 million, and I try to visualize what my future buyer would think about my Novo unit and Springleaf unit, basically, if I want to sell for at least a 300K quantum gain, that means that in future, if I were to put my Novo unit in the market, I have to launch at least $2.3 million and balance D71. But of course, if I have a brand new TOP product, I can sell it at $2.45 million. If I get it at 2.15, I still have 94 years lease, all right? So I think the resale market is really creeping up very close to some of the new launch content and PSF, especially for Springleaf. Let's have a look at some more example. This is Minton in D19. In case you are coming from D19, you are a little bit confused. You are looking at some of the very big projects right there. This is a beautiful project as well. I love this project. It's done very well. And of course, a lot of the good projects, unfortunately, they're getting a little bit aged, all right? So the lease started from 07, and of course, it took them 6 years to complete because this was an en-bloc HUDC, okay? So 07, basically a 3-bedder now is about 2.05 for 1346, and after I reset it, basically it's about $2.5 million. And if I try to compare basically with maybe one of the unit over here at Springleaf, I think in terms of quantum, this is pretty attractive for a brand new product, all right? So always take note, use the lease reset kind of mindset to check whatever quantum you're entering in. Further examples will be Florence as well, just TOP last year. So when I reset it back, full price basically for this unit is a 3-bed, 2-bath at 1.85. It's actually at about $2 million. PSF, not very low as well, all right? And of course, after we reset it, it's very comparable to a brand new asset over here, okay? Now, our consultants have all the lease reset across different projects comparison. And of course, I think the important thing is that whatever resale that you're contemplating, try to visualize after 4 years, how are the buyers going to think about your assets if you intend to sell, okay? Let's move on to the buying power research. Okay, buying power is important. Buying power is to think about and visualize in future who are the people that is going to absorb my investment if I want to sell. If I want to sell in 4 years, 8 years, or 10 years, there's two types of buying power. First type is the region buying power. Of course, when we look at all the launches in this area, Lentor has been absorbed pretty healthily. The PSF has also been transacted at a very, very healthy range to set a new kind of good benchmark over here. The number of balanced units, I think is pretty good news for Springleaf because we know that there's not a lot of competition left over there. And of course, in terms of the future BTO upgraders as well, I think the entire North region has quite a fair bit of MOP units that are coming up. So in totality, over the next phase, in the next 5 to 8 years, 23,000 future BTOs are going to complete. But I think for North area is a little bit exciting because North area attracts people from Northeast, from the Thompson region, and also from the North region. So this part, I think is a very unique portion to the Springleaf project. But importantly, I think for this site over here, we have another set of demand, which are the existing private property owners that has already lived here for the last 10, 15, 20 years. Some of them are owning landed properties, they are owning condos, their kids and future generations might want to buy near them. So the private property ownership cluster is pretty strong in this 3 enclave over here. So basically Springleaf, you have the Lentor region, Teachers Estate, you also have the Thompson and Upper Thompson region. So we call this the recency effect. Basically, when you grow up in the area, you tend to want to buy back the same area, maybe near to your parents or something like that. All right? So let's talk about the future buying power. Okay, future buying power, of course, I'll leave this to Rain to talk about the interconnecting township, but I think importantly, when we go into a new project, a lot of people didn't realize that actually the asset class attracts one more group of buying audience. So there's three types of buying audience. One is buyers and investors who love to have the first mover into a new launch development. Second is people who are hunting for resale properties because they don't want to rent, they want to immediately own. But there's a class of buyers that is in the middle. So they only want to get a brand new that nobody has lived before. So which is why sometimes when you have a property that you have waited for 4 years, you collected your keys, and you want to sell, but if you go and rent out, you will lose this group of buyers. So if you intend to sell, you need to delay your rental. Once you start to rent out and sell with tenancy, you lose out to the units that are vacant. Because this group of buyers, they always don't want a unit that people stayed before. And we call them the TOP sub-sale buyers. But at the same time, they don't want to wait. All right? So these are the group of buyers that are in line and waiting for projects that are going to TOP. And I think it coincides also with whatever seller stamp duty that has been in place. I don't think there's an impact because we call this a blackout period. And just nice, of course, once the construction is completed, your SSD is also fulfilled. So it doesn't really impact private property investors. And importantly, this is basically what is happening for Springleaf. And by the time it TOPs, you still have 94 years and you're good to go. All right, so this is the ballast curve to take note if you're hunting for a resale project, because most of the time, when you look at this, sometimes we buy into a project that has a balance lease of 80 over years, and maybe we want to live in for 5 years, but by the time we sell, it starts to get a little bit aged, and then your buyers will start to question, and sometimes you feel very frustrated when you have to answer about the balance lease, all right? For example, this project as well, it took them 10 years to complete, so importantly, look at the tenure start date as also. So imagine buying at 83 years, and then when you stay for 5 years, the balance is 78, okay? Now, later, as you check in with our consultants, they are going to share with you this very interesting disparity effect sheet that we have, that we compare with the resale around this region. They are going to talk about the volume and density, which is a very important aspect for investment. We're going to lease reset all the quantum of some of the properties in terms of their asking prices back to a full 99 years quantum. Of course, some of the freehold properties you will see here, they belong to the smaller one, except Meadows at Pierce. But of course, Meadows at Pierce doesn't have the MRT effect. And once we reset the PSF level, we can also see very clear disparity and the remaining lease if you were to go for the resale property. So this chart is going to help you make decision if you're comparing resale versus Springleaf, okay? Now, let me move on to this portion over here. Now, importantly, I think we all don't want to be stuck with a property that is having a potential of low growth or going to be stagnated. We call this the stagnation effect, because stagnation will mean that it really delays your investment kind of in and out strategy. Your borrowing power will start to dip as well as you age. So importantly, I think pre-catalyst opportunity is very important. So we have also found out, based on our research team, is that the remaining stock basically around this region, especially when you compare to Lentor, this is basically for one bedder. So the remaining stock in terms of their asking quantum is quite a huge contrast to the one bedder over here. Remaining stock for two bedder, also a pretty huge contrast to some of the Springleaf 2-bed 1-bath and 2-bed 2-bath. 3 bedders wise, when you compare that, quite a stark difference as well. Then 4 bedders, as well as 5 bedders. All right? Okay. Stagnation, importantly, will link to your volume. So you will see a lot of our consultants highlighting that Springleaf 900 over units, extremely exciting. One of the key rationale is that over the last 10 years, volume transactions and valuation growth are all interlinked. So sometimes it's not really about freehold, because freehold properties, if you have not enough volume of transactions, you will get to see a stagnated graph and your capital gets trapped. So these are fantastic for own stay if you tend to stay for very long, 15, 20 years. But if you want like a mid-term strategy, 4 to 10 years, you have to take note of the volume effect. So for example, freehold, 74 units, also pretty stagnant. only one person managed to exit after a long holding period ever since 2022. And of course, projects, even though 99 years, but as long as they got a good volume, most of the time, the exit shouldn't be an issue, okay? So let's come back to the key purpose. We talked about this at the start, all right? But the important thing is that no matter what season you're at, take note of these two key things that is very crucial in terms of a decision making, is that whatever property you want to invest, make sure you can exit to create a liquidity event for the next stronger property. So what kind of market are we in right now? 2020 to 2022, post-COVID, we entered into a seller's market. Why? Because interest rates were extremely low at 1%. We call it a seller's market, meaning that when interest rates are low, sellers call the shot. Sellers can hold, and they can ask for high prices, okay? 2022 to 2024, the Fed increased 11 rounds of interest rate. We went into a high interest rate environment, 3%. It was pretty high. A lot of buyers were very cautious. That is called a buyer's market. That means as a buyer, I can wait and see. But if this is going to happen, and in fact, right now you look at the mortgage rate, you can already start to get 1.99% because the banks are already seeing that indication coming in. And we are moving back to a seller's market, meaning that resale sellers can call the shot. Developers can also call the shot because FOMO is going to kick in. So now is about 1.5 months to the next Fed meeting. I think it's a good chance to really be in August at this place, because I think before the seller's market FOMO kick in full gear, there's still a chance for a pre-catalyst opportunity. So take note, if you have a property now, if you are planning to go into a stronger asset, whether you're coming from a HDB property or buying a second property, that means you are enhancing your portfolio, you should always do it in whatever market possible because it is enhancing your portfolio. But if you intend to retire, you should only do it in the seller's market because you call the shot. That means if you are moving from a condo or landed to a HDB or to a smaller property, you should only do it in the seller's market. But if you're expanding your portfolio, you should always do it when you are ready, all right? That means we don't time the market. So take note, as long as you are going expansion, getting a second property, going into a stronger asset class, you should do it as and when you can, all right? You don't time the market. So basically, this is the summary, all right? But if you're switching to a weaker asset, maybe you are in a season of retirement, then you should do it when the market is very hot, okay? So last but not least, the stack and site plans exit simulation. Let me share a little bit about this. So when we look at the indicative launch price, when I saw this, basically, I think in my 18 years career, compared to whatever is available now, this, I think, is really attractive because originally we thought it would be close to about 2.3 to 4 PSF. But of course, the starting point will be from about $2,000 PSF. But the important thing is, I think the calibration of the quantum is very attractive, especially for the 2 and 3 betas, and of course the 4 betas as well. So when you look at basically the 2 betas, 1 odd million, 1.3 plus over million for 2 bed, 2 bath at the starting point. And then for 4 betas, starting from about 2.5, 5 betas at 3 mil. Later, I'm going to show some charts as well with our consultants that 5 betas quantity in D26 is extremely low. So if you can go for a 5 beta, of course, you will be entering into a zone whereby supply is really low over here. And of course, for 3 betas, very attractive commencement quantum also in terms of its ranges. So as you move on with our consultants later on, they're going to go through these 2 things with you. You can do a lot of simulation with them in terms of the stack, the levels that you're hunting for, the stack direction, the potential kind of profit that you're hunting for as well. And all these charts are also available for consultants. So later as you chat with them, we have analyzed the entire D26 as well as the entire OCR region for your benefit. So they will be also able to do this couple of things with you. Okay, but last but not least, before I hand over to Rain, is that I think the importance of going through the frameworks is that if you are in a season that you also want to calibrate a little bit about your property journey. Let me just share this case study that we have with some of our clients. So this is a family that we have moved them through 3 different phases. And of course, they went through the entire kind of like 4 different kinds of transactions with us ever since 2020. Now, one of the things that maybe a lot of people will ask is that, well, it seems very troublesome to go through so many transactions, and why did this couple decide to do that? So basically, they sold their HDB through our team, and if they didn't sell the HDB in 2020, I think by now they could have made another $130,000 because last time we sold the HDB at 675. Now the HDB is worth 800 over 1,000. But then, because they did an intentional property journey with our team, their portfolio has expanded to $4.3 million instead of 800 over 1,000. And why did they want to expand their portfolio? Very simply, and these are 2 working professionals. They are not business owners. They are just very hard-working professionals with kids. And one of the key rationale is because if they didn't take action, the valuation on their portfolio is still stuck at 800 over 1,000. But because of a strategic move to really analyze using the capital from their BTO, profit from their BTO, refunneling it with their high income producing years, they can achieve a 4.3 million portfolio now. And the key idea is to be able to own 2 properties with very, very kind of like comfortable cash outlay per month, all right? So now basically they come up with 5,700 per month to own 2 properties. One is to stay, one is for investment. And basically all they want is just to safeguard their future by having a store of wealth, all right, in 2 real estate. Okay, so our consultants believe in this approach. Basically in your highest income producing years, your active income should be funneled into asset income. Because why? When you hit 55, your asset income can be funneled into passive income. So let me share with you why. Why? Because your active income is the most risky, okay? And we are very afraid of loss of active income. So if you don't funnel it strategically, basically what's going to happen is that if your active income is weak during the age 55 to 85, most of the time our route is to really downsize, okay? Because we don't have a very strong asset. So if that couple were to stay on for that same MOP BTO all the way to 55 years old, likely they will have to downsize, okay? But because of their strategic move, they moved from a $670,000 HDB now to a $4.3 million asset, and we are trying to build this equity triangle for them, all right? And their goal is very simple. They can choose to press the button at 45 years old, or 65 years old, or 55 years old. They just need to choose when to press the button because our simulation is based on a 2% inflation growth all the way until 65. We're not even calculating asset inflation. We're just calculating inflation at a national level, okay? So at age 55 or 65, let's say for example there are 2 properties go up to $6.6 million in terms of valuation, what can be done? Basically is that my personal belief is that we should divest. That means there's no point to bring your property to the grave one, all right? You should enjoy your fruits of labor, but it is very strategic because you will still have 2 properties to leave for your kids. By that time, you can buy the very old resale properties, doesn't matter. All right, go and buy Mandarin Garden, left 40 over years or 50 years, doesn't matter. Buy the very old properties, one for stay, one for rental, fully paid, collect rental, no mortgage, put in DBS stock, all right? Get 6%, collect 13,000 a month. These 2 assets pass to your kids, hold $2.5 million in cash. So this is what we think, all right? Now, if they intend to press the button at 55 years old, basically it can still be funneled into 3 different pockets over here. And you can still have 1 property, passive income of $8,300, but importantly, you can still keep $2.4 million in cash, okay? All right, so I've come to the end of my segment. I'm going to pass on to Rain, but importantly, later check with our consultants. They'll be able to go through these 2 simulations with you. And I hope to see you soon. And of course, I'll be here all the way until 10 p.m. To interact with some of you as well. All right, thank you very much. I'll pass on to Rain.
Let me begin with sharing a little bit about the developers. Basically, the developers are visionary township developers. Namely, they are led by Guaco Land and Hong Leong. Have you heard about them before? Right, so if you look at some of their portfolio itself, right? On the screen here, you can see they did quite a bit of the Lentor collection, right? Whereby they built the whole entire township, as well as the Guaco Midtown series, whereby they had Midtown Bay, right, and Midtown Modern. Let's check out some of their launches. Recently, in the Lentor collection, you have Lentor Modern, which was sold at 84% at launch on the first day, as well as Lentor Mansion at 75% at launch. And of course, the latest one that they had together with Hong Leong was amazing Lentor Central at 93% on launch day. Isn't that amazing? All their results. A little bit basic details of Springleaf Residence. We have a total of 941 units for your choices, right? We have 1 bedder all the way to 5 bedrooms type for everyone to choose from. 5 blocks of tower blocks, 25 stories each. We have 1 conserve 4 stories, full condo facilities, and we're expected to TOP in the second half of 2029. Of course, we're located in District 26. We have a very, very strong team of consultants, ADDP, architects that did quite a number of the Lentor cluster for Guaco Land, as well as China Construction. If you know, they did quite a bit of large projects from a lot of the top developers, and they are actually in the top band, right? They are the top band number 1 main con that we have. And of course, over here itself, later, the consultants will show you around this beautiful show flat. And we are located actually at the Springleaf MRT station itself. We are less than 2 minutes away, around 110 meters. And you can look at this Thomson East Coast line over here, right? The government spent $28 billion on Thomson East Coast line, and we always say, go where the government go, right? Correct or not? Okay, so the 28 million TEL, right, is just barely your doorstep, okay, our Springleaf Residence to the MRT station. And you can see we are only 9 stops away to Orchard, right? As well, it goes right into our business node, which is MBFC, and of course, all the way to the airport that will bring you to the rest of the world. And what's interesting, if you look at the upcoming MRT lines, Springleaf MRT is actually 5-stop radius to 5 MRT interchanges, which means to say that you get maximum connectivity no matter where you are going. Don't worry, if you're driving, you'll be very happy to know that you are well served by the major expressways, SLE, CTE, TPE, just at your doorstep. An upcoming North-South corridor, which is actually right, if you can see on the screen here, that's where Springleaf is. And this is actually where the North-South corridor entrance is going to be. And of course, with the completion of North-South corridor in 2 phases in 2027 and 2029, that is just in time for Springleaf's Residence TOP. All right? You can see that with the completion of the North-South corridor, it will actually slash your traveling time from the northern side to city by 30 minutes and your driving times by 30%. How great is that, right? We're going to shorten all our traveling times. And of course, let's take a look at some of the basic amenities that will be serving you in this area. We have the soon to TOP Lentor Modern, right? Going to be ready probably later this year. And of course, the good old Thomson Plaza. And of course, local fare. Every one of us knows Springleaf Prata, our favorite prata place, right? And all these eateries. But what you really want to know is actually right beside Springleaf Residence, there's going to be a land parcel that's actually currently open for tender, and it's going to be a residential with a commercial element. So when Springleaf Residence TOP, residents will really get to enjoy not just basic access to the MRT station, but amenities right by the building itself, okay? And nature and park lovers, you will love this place because we are right beside the Springleaf Nature Park, not too far away from all the reservoirs that you can see over here. Our development is also the very first biodiversity development in Singapore, and that's the reason why we have a biodiversity consultant, right? Working on this project to ensure that we minimize disruption to the ecosystem. And I think that's quite interesting, is really to try to leave our parks and our nature parks untouched. And you can see Springleaf Residence will be actually enjoying the first mover in this area. We are the first high-rise development in this area itself. And if you see right on the opposite side, there's all the landed cluster, which is very, very low density. And with the upcoming land plots identified, right, if you can see over here, this is the one with the commercial component right beside our development. And in the latest master plan, actually, they also identified this plot over here and here for our future land sale, okay? All right, a little bit about myself. I'm an ex-educator in MOE for 16 years before joining the real estate for close to a decade now. I've been specializing in project marketing. As a millionaire producer, and I lead a team of 60 associates, okay, and I hope to bring a lot of insights to every one of you. This is some of my portfolio. I led quite a number of launches also for Guaco Land. Some of the, you can see over here, the Midtown series, Mayor mentioned, this all belongs to Guaco Land. I'm really happy to be actually leading one of these mega developments in 2025. And of course, continuing from where Melvin left off, okay, is really to share with everyone who's here today why Springleaf Residence might possibly be your last pre-catalyst opportunity because of the price point, the very attractive price point that we are actually looking at. And we'll be looking at 6 major points to help you remember this. Of course, with Guaco Land, it comes with very reputable developers. We are less than 100 meters sheltered to the MRT station. The land size close to 345,000 square feet and more than 900 units is very, very rare in Singapore, right? And actually, do you all know that developments being near to the green, they actually command a higher resale pricing? I'm going to share with you a little bit more. And of course, what's happening to all the land cost prices that the developer has been bidding, how much they have been bidding, how much they've been selling for. I'm going to give you an overview. And of course, a quick update on what are the upcoming transformation that we will enjoy. Okay, so back to the developer. This is Guaco Land for you. They actually the top developer for 5 consecutive years. And what is it in it for you as a buyer of strong developers? They actually deliver very, very good quality products. At Key Collection, you expect little defects. And if you have not seen our show flat itself, you will realize that our layouts are extremely efficient. They're pretty regular and no wastage of spaces. And that's Guaco Land for you. And they have great pricing strategy as well to protect the first mover buyers, and that's the reason why we have been seeing such a large crowd over the weekend itself, right? And of course, upon TOP, we realized that actually Guaco Land's project they are very, very highly resaleable, right? And for highly resaleable projects, actually comes with good profitability, and of course, all Singaporeans, we all love MRTs, right? So this is Springleaf for you. This is how close it is. Look at the picture itself. 2 minutes sheltered to the MRT. No need to open umbrella. Okay, door-to-door step to MBFC if you have to working there. Okay, and proximity to the MRT, obviously we know, very, very popular. Strong resale rental demand. In bad times, they're pretty resistant to market downturns. And it definitely reduces your traveling time because the train schedules are pretty much quite predictable. And you get to travel in comfort, right? Which is sheltered to door to your office. This is a table to show you that in Singapore, for projects that are more than 300,000 square feet, how rare it is, only 4.3%. And how about projects more than 900 units, only 1.2% in Singapore. So in order for the developer to buy such a large plot of land, is readily available. And what do big mega projects with big land benefit you, right? Definitely for Guaco Land and Hong Leong to bid this plot of land, they're definitely confident that this area is the area of growth, right? And of course, full facilities, beautiful, beautiful facilities. We have 4 pools here. right? And we even have an ECA block with a mini running track. Lower maintenance, right? Because we have 941 units, stronger sinking funds for any future A&A, and different unit types for you to choose from, and of course, better performance for resale and rental because big developments actually enjoy stronger transaction volume. Okay, this is an article from EdgeProp, and you can see in July, just recently, this is an article to show that resale developments near to nature parks, near to greens, command a much higher pricing, right? Views facing the greeneries. And because, why is that so? Because in our urban hectic lifestyle, I think it's really nice if you can go home and enjoy the view on being near to the parks and enjoying the nature during the weekends. And what are actually the benefits for being so near to the nature? And of course, we have the 24/7 air purifier for you, okay? So this is natural, right? Definitely, what does the doctor say? When you're tired working on a computer, stop and look at the green, right? Right, same over here, right? And actually, developments nearer to the parks, green, they enjoy cooler temperatures. Very nice panoramic views over here. The trees, the strong, lush greenery actually acts as a sound barrier and give you mental clarity. Next, I'm going to talk a little bit about the land cost support. And this is something probably will be very exciting for you to know because this gives you the very, very safe exit in future. So Springleaf Residence was being sold at $905 per square foot per plot ratio. And just to remind everyone, 905 PSF PPR is actually a harmonized plot. Everyone know what's harmonized, right? Probably. And if not, please check with our consultant, okay? And you can see right next to us, which is the residential commercial, is going to be closing in October, right? And will be for sale next year. Let's look a little bit on how our land cost of 905 compare to the Lentor cluster. If you look at the Lentor cluster land cost itself, you can see, example, Lentor Modern at 1205, Hillock Green at 1108, and so on and so forth. And you can see these properties itself over here, they are all non-harmonized. Can I remind you that only Lentor Central and Lentor Mansion, they are actually harmonized projects. So you can see that our land cost itself is very, very attractive, and that's the reason why our Springleaf Residence indicative price, I would say, as my clients say, is 2 years ago pricing, 2022 or 2023 pricing, okay? And on July 1st, not too long ago, right, last month, of course, we see the green light given for Thompson View, which is 4 stops away from Springleaf. And the land cost is 1178. And that's a 30% price gap, which is just a 4 MRT station away. Next, let's look at what are the land that were being sold in the OCR in 2025. We have Chuan Grove. Chuan Grove transacted for 1376. Of course, yes, it's a lot more central, but it still belongs to the OCR region. That's a 52% price gap to our 905 at Springleaf. Lakeside at 1132, that's a 25% price gap. And of course, Dairy Farm at 1020 is a 13%. And of course, a very, very famous one in the east side, Bayshore, right beside the MRT station owned by Singhai. Over here is 53% price gap at 1388 PSF. And these are all OCR pricing, okay? So that's the reason why Melvin mentioned earlier on that this could possibly be the last season that you will see the 2250 PSF launches, right? Okay, this is very interesting, which is the transformation, and we always say go and buy where the government have plans, correct or not? Let's take a look at in 2014 itself. You can see a lot of yellow color over here. Yellow color actually means reserve land. Okay, as we move along the years and the master plan change, you can see over here they actually start to become residential, which is the beige color one. Okay, and in the latest master plan itself, you can see from the residential land, then it became land with different amenities, with schools, with educational institute. And what is really interesting, I want to bring your attention over here itself. Can you see this green color over here? And that's where Springleaf is, okay? And can you see this green color portion has become bigger? Can you see the green color portion has become bigger over here? From here to here, right? So what does it say? It really means that the Springleaf Forest is going to stay for good. It's going to stay for good because we will be enjoying the fact that we are next to the nature park itself, okay? And of course, you can see as the government carve out more and more land for us on the TEL. And of course, this is an article that came out just yesterday. I'm not so sure how many of you caught this article. It came out yesterday on Sunday. This is an article that came out of the Straits Times, the timely transformation for Singapore's North region. You can see new homes, many new homes coming in Woodlands, Kranji, Lentor, and Springleaf. Lots of public and private housing coming. Woodlands Regional Centre expansion. Business nodes, lifestyle destination, and of course, the RTS link. This is an article from yesterday's Straits Times. And last week, we also have this on Straits Times as well, the move of Khatib Camp. So the move of Khatib Camp will bring along what? Over here, everyone can take a look. Okay, become housing plots. The government is going to put future amenities like schools, parks, healthcare, and civic and community institution. And that's not too far from us. Moving along, let's look at the TEL. I'm always very fascinated by TEL because I think the government is very intentional in building TEL, the infrastructure ready before opening the land for sale. Okay, so you see 3 stops away, that's where the Singapore RTS will be, Woodlands North, right? And that's where Springleaf is, and we have different plots over here for sale. Woodlands Regional Centre, which is just a couple of stops away, 2 stops away. And the Woodlands Healthcare Campus, 1 stop away. So those of you looking for investment, maybe you were looking to rent out 100,000 jobs coming in this area, right? And government has also released more residential plot on Caldecott and Mount Pleasant recently, if you have been following. And not too far from us, we have Seletar Aerospace Park as well. We have 6,000 aerospace professionals. And you can see the reason why government is putting the infrastructure TEL in place is to get ready to receive this demand, okay? Before we end today, we'll give you an overview of what's actually happening in the OCR region, okay? OCR region in the last 12 months. So let's see what happened in OCR in the last 12 months. Alta in Clementi, this is the highest transacted PSF in Clementi, 2,881. Sora, 2005. Lake Garden, 2005. Jayden, Jurong East, 2008. Woodlands, which is Norwood Grand, 2002. Chuan Park, 2007. Park Town at Tampines North is 2,600. And Bagner House at Sungai Bedok, which is a small boutique freehold one at 2007. Okay, so this is actually what's happening in the OCR region, which has been transacted. Okay, right? And some of my clients ask me, Rain, where's the demand coming from? Okay, so from our studies, the buyers are all coming mainly from the northern region, the upgraders from the north, the northeast, and even from the western side of Singapore. All right, and when Lentor Collection actually launched, a lot of clients ask, is there going to be oversupply? But if you look at District 26 itself, which is a white part of the table over here, are the existing resale condominiums from number 1 all the way to number 12. And I add on all the new supply coming into the market, which is the Lentor Collection. I add on Springleaf Residence as well over here, the number of units. And then I add in Lentor Gardens, which is upcoming. And you will see the total is only 7,300 units, right? Actually, if you saw what Melvin's slide was, we have actually upcoming BTOs that is going to TOP of 23,000 possible upgraders. Definitely, the supply here can be easily absorbed. My last slide here is to share with you from the launch of Springleaf Residence in August this year, all the way to when we TOP, this is what's going to happen across the years. After we launch over here itself, you will start to see the Lentor Collection TOP, am I right or not? Okay, so when the Lentor Collection starts to TOP, there will be price catalysts because the TOP projects, they will start to sell. When they start to sell, they will push the price up. Okay, and also we see the completion of the RTS in 2027 as well as the completion of the North-South corridor. And when we finally reach TOP or the 4 years SSD period, you can see we have actually gone through many, many rounds of price catalysts. Okay, at the same time, of course, at the end over here, you can see the demand in the area of the North cluster of possible upgraders could be your potential buyers. Okay, so definitely the exit is all in sight, right? So this is very strongly supported, and that's the reason we are seeing very, very strong demand at Springleaf Residence. And this is our timeline for preview. So we will actually preview all the way from actually started on the 1st to this Sunday is our last day, okay? So if you are keen to participate in our balloting process, your documents must reach us by Monday, right? And then we will do the e-balloting on a Wednesday, and then the VIP will book on a Friday, and the public booking is actually on the 16th on a Saturday, all right? And then my last slide over here is just to let you know, for those of you who is the first time we are meeting, right? It's just to help you understand whether you actually qualify for our priority booking. Please speak to my consultants friends from KW and PLB to understand whether you can qualify for the priority booking. Just to highlight, if there's any ex-staff from the Conserve building, which is Seletar Institute and Upper Thomson Secondary School, you actually fall into our VIP. All right, so interesting. Okay, the youngsters, I'm sorry, probably you don't qualify, right? But I see some of you maybe can. All right, so ask our consultants if you have any questions. And with that, I will hand the mic back to Grace.